The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We've got an old friend today coming on as our guest, John Person. John was on the floor during the time I was at the Merc during the early 80s and stuff. We've kept in contact through the years. He's down in Florida. He's a tremendous technician. He goes to all the money shows, and he's well respected, and he's a very, very informative speaker. They used to have contests down on the Chicago Mercantile Exchange floor on who was the most handsome of all the the floor traders that were down there. Well, John won just about every time. I'm not going to tell you who finished second. I'll let you figure that yourself. Anyway, let's take a look here at the DAX. As you can see here, a beautiful, colorful butterfly pattern, making a 1, 2, 3, 4, 5 expanding triangle up here. If that is the case, may or may not be the case, but that's what we're looking at, folks. Whenever I hear someone talk about it's different this time, and I probably heard that 4 or 5 times over the last 3 or 4 days here on Bloomberg. It really makes me wonder, say, gee, what is really different this time? Now, we've had an explosive move here starting on Friday. If you remember when the report came out, the market was closed. I posted this yesterday, and I talk about these things. I know sometimes you look at them, sometimes you don't. But look, this is the E-mini S&P on a 15-minute chart. You can see where we were Friday. We were supposedly closed, but Globex was open for about an hour, about 2 hours. You'll notice that we went up and we hit that key spot there right after the report, and the market came down Sunday night and in early Sunday morning, came down 20 handles. And from there, it went higher and higher. Once it broke out of that 786, away it went. And I said, we don't know whether it's going to stop at 40.38, 40.48, 40.58, 40.68, 40.78. We don't know the answer. But if you just do your homework tonight, just humor me here, folks. What happened last night after the market made its high at 40.75? It dropped 20 handles, just like it did the night before. I mean, right down to 40.55 and right back up 40.55, 40.75 again. So it repeats over and over again. This has been proven by Andrew Lowe in his book, yada, yada. You hear me talk about this stuff. But believe me, folks, it does work. You got to do a little bit of work yourself and, do your own work, and you'll be, far better off. So let's remind ourselves of that it does happen that way. Now, I wanted to bring another chart up, which is the German DAX. This is on a little shorter time frame. This we showed the daily before. Now we're going to look at it on a shorter time frame. And here again, you can see the ABCD patterns that are going up to this 15,400 level. All of these markets have been going extremely strong. European, all of the emerging markets have been going on. Even the Hang Seng Index that we featured last week, the fact that it gapped up and had a nice run and it's gotten above 30,000 again, which is a very positive thing. So hopefully all of these good things that are happening with the vaccines and stuff is going to get our economy running back and forth to make it look like it's going to be good. Now, I wanted to talk just a second here about the E-mini S&P again. Let's just take a look at it right here, folks. This is now what we're looking at now is a daily chart going over the past couple of months. There's nothing unusual here. You can see here we've had the bottoms came in. You'll see the first bottom in March came in right at the 78% level. Okay, the next bottom that came in at the end of March came in right at a 50%, a perfect ABCD Gartley. And now what we're doing is we've had a 9-day run in the first cycle, and we're in a 9-day run in the second cycle that's due to stop Wednesday or Thursday, if that's going to be the case. And you can see 4107, I mean, the difference between 4075, where we are now, and 4107 is one politician saying, gee, I like the way the stock market's acting, and you're going to be there. So there's nothing unusual about what's going on here. It's just great volatility. And that's what we love. I mean, we love the volatility. I mean, that's the whole key to learning to do some of this stuff, is to profit from the volatility. Now, here's one other one that I wanted to mention to you, because it's in the same ballpark here, and that is the NASDAQ. If you notice the NASDAQ, we have not made new highs. It's been the lagger. All along it's been the best. But we are now where we are today. We are one standard deviation higher than we were 2 days ago. That's unusual, because you see, the last time we had a one standard deviation move between the 8th and the 15th of March, the market came back and gave back 61% of that. So we're in that area where we are very, very overbought, as anybody can tell, with the S&P being up 70 handles yesterday, the Dow Jones being up 400 and 220 plus in the NASDAQ. Those are very overbought, but these are not unusual things. This is just increased volatility, and we're going to see that for the whole rest of the year. Whether it's due to these Reddit guys or the social networking, I don't know, and frankly, I don't care. All I know is that this volume is actually good for the market. And hopefully this vaccine stuff will help everybody out, and, we'll get back to normal. And things are pretty much normal, going on here. I understand yesterday that there was a baseball game down in Texas that 44,000 people went to. Was that true? I don't know if that was fake news or not, but I heard that on Bloomberg, really early this morning, that I guess it was, opening day would have been right. So I don't know. That's a lot. Anyway, the young people, they're not bothered too much about this. It's just the old folks that are having trouble with these things. So remember, these patterns repeat over and over again, and that's what we're looking for. Remember, yesterday we were talking about one of the patterns that we were watching on the Forex. We sent a special video out. Yeah, it was 35,000. I'm sorry, Jim. I thought it was 40,000. It's 35. Anyway, this is the pattern we were looking at in the British pound. We had that beautiful, as the first really good ABCD pattern we'd had in the downtrend. We've had some nice corrections, but no perfect ABCDs. It's now gained a little over 100 pips. So the suggestion was, to put your stop at a break-even point so that you don't have to risk anything with that, because if you do, then you have a risk-free trade, and that's what we're looking for. The profit objective on that is made 600 so far, but we were looking for about 150 pip drop into the 61% retracement on the British pound, and that would get you right at the level of $900 profit. So you're either going to make about 200 or you're going to make about 900, one of the two. I don't know which it is, but you know what? Nobody else does either. That's the real key. As far as guests today, we have Arch Crawford tomorrow. Always a lot of fun. And one of our most frequent guests that everybody loves on Thursday and Friday, we have two all-time money winners from the what do they call that thing? I can't even remember. Timer Digest. We have Stan Harley, the Harley Stock Market Letter, and on Friday we have Tim Bost, Financial Cycles Weekly, and on Monday we are going to have none other, boys and girls, than the wizard himself, from Naples, Florida, Norm Winsky. Okay, now let's move on to a couple other charts that we need to talk about, and that is the soybean chart, folks. Let me show you why soybeans are so strong. Now, this has to do, this was sent to me by Rich. Someone asked the question, why are soybeans so strong? And you'll see from this reason, this is why. I'll get this up. We'll talk about this when we get back.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a couple of charts in here. One is about soybeans ending stocks. In other words, when you don't have a lot of soybeans at the end, the prices are going to be higher. As you can see, in very low stocks, prices higher. And 2 years ago, we had huge amounts of stocks, prices lower. Well, that's what you are as a technician, folks. The fundamentalists live and die by these. The good part about this is Mr. Z follows this stuff like a Bible, and he's looking for buys when the prices are low and sells when prices are high. So all we're doing now as a technician is trying to line up some really nice patterns in some of these markets to take advantage of some of these wild swings that we're seeing now in the soybean market. The problem is they're jumping around so fast, by the time you see them, sometimes they've already happened. Now, we just had one of the most bullish reports we've had in a long time. There's some skeptics about it, but if we take a look at the market here, this happens to be the May soybean market. And as you can see here, that huge gap on the 31st when we had the stocks report, the things jumped all the way up. We had just about a 70-cent run in the soybeans, and then the next 2 days, the next 3 days, we came all the way down to the 61% retracement. And now what we've done is we went back up to the 61% retracement. We're backing and filling. And so what I'm doing is just watching these patterns, because what it is, it's a sum total of all the buyers and sellers that are out there. And I'm trying to find a spot where it's going to say, well, let's look, it's got an interesting spot here where I might be able to make a profit off of this. And so that's what I'm looking for, is something like that, trying to find something that, gives us a really, we know that the probability on these trades that we do are better than 6 out of 10. This is, it's just hard to not believe that after you do so many of them. The second thing you got to remember is how much it's going to cost you to see whether you're going to be right or not. That's the key to all what we're doing. And usually the risk is somewhere between $300 and $500. Sometimes it's a little bit more, sometimes it's a little bit less. So we'll walk through that. We're getting off the subject, someone just asked about the crude oil. Yesterday we had that big break in crude oil where we dropped over $2 and something per barrel, and we snapped back today, folks. We came back $2 a barrel, went right back up into the resistance at the 61% retracement up there at 6,100. So we're in a pretty good trading range range now between 57 and 61, 62 in the crude oil, what it looks like, given that much volatility on the downside and then also on the upside. Several people have asked questions about the natural gas. We're still trading around the 255 level. We're waiting to see what the next pattern will hold. We went right near that 250 level again, but there's really nothing to do with the natural gas, so we're standing aside on that. Those are the main ones. The Treasury bonds. We've had a nice rally yesterday with the stock market up that much. The bonds were up a whole 1.5 points. Just about 1.5 points as I recall, and they're up again today. So they are finding buyers in here, so that's a good sign. Folks, we are in a liquidity. I'm trying to phrase this in a nice way. We have a dollar that is based on nothing. It's based on paper that they're printed by the Treasury and issued by the Federal Reserve. Folks, this is not going to end well, but when it ends, I don't know. I really don't know. Tammy's saying thank you for the webinar. Yes, Tammy, thank you very much. It was a great webinar. We had a lot of fun, made a couple of bucks, and that's really good. That's the one good thing you have here at TFNN, folks. There's some really good people in here that understand the market. I mean, every single person that they have here at TFNN has been around a long time and thinks almost all the time about how to make your job easier. Because if we make your job easier, you're going to stick around. And believe me, I enjoy doing this. I enjoy doing this show every day. In fact, I love the afternoon time for me because it's much easier. I get a lot done earlier in the morning, and I'm able to, facilitate what I think is happening with the markets today. But the market is basically doing nothing from my perspective. It's the S&P after a 60-handle run. It's just backing and filling. It's exactly what it did last night. It backed off to 55 points. As a matter of fact, two of the people that were listening to the show yesterday mentioned that, it did exactly what it did the day before. That's right. Well, try it again the next day. See what it's going to do. It'll keep doing it till it doesn't do it, and then you move on to the next one. But you're looking for probabilities, and that's what they are. So if it probably did it once, it'll probably do it again. Usually it'll go through three cycles, 3 repetitions, and then after that, it'll change a little bit. So remind ourselves that that's what these markets are all about. It's not about how much money you make. It's about how much money you don't lose. Now, one of the things I wanted to talk about here, you talk about being wrong on something. Take a look here at what I was watching here in the Google, because on the FANG stocks, I was looking for Google, to make this big distribution area. We've been in this gap up distributions February, March, and April, and I was thinking it was going to break out to the downside. Well, guess what? Mr. Market surprised me once again, and we've broken to the upside. So that happens all the time. Sometimes they work, sometimes they don't. Now, one of the reasons why the market wasn't a big surprise from the upsides, if you remember here last week, we were watching the price of Apple as it was down there at that 78% level at 119, and we brought that to your attention because that was a perfect 786 ABCD. That makes it a perfect Gartley, and from that level, we've already exploded up to above 126. I don't believe we've hit 128 yet. The target on this was 127.77. Would one of our mini gurus here in the room give me an idea of where the Apple is trading this morning? Because we're supposed to get to about 127.77 or 128 is where it's supposed to go to. Of course, it can certainly go a lot higher than that, but that's the target of the ABCD, which is the first, bearish ABCD that we've had. This market's just been dropping like a rock, but this is the first ABCD counter trend we have. Has that been the high, Danny? 126.60. The high should have been right around 127, I believe, and change, but I don't know what the high was, and I don't follow it. I just show you the stock because it's the most widely held stock in the world, and it does follow the market pretty good. But, boy, this one's been lagging the market quite a bit, but it'll catch up. It usually does anyway. Okay, yeah, the high was 127.13, so that's right in the ballpark of where that ABCD should be coming to an end. So we'll keep a close eye on that one. As I mentioned, we will have John Person as our guest. I don't have all the contact information for him. He's a private trader that's done a lot of work. He does speaking for the Money Show all the time and all other places too. He goes on cruises and do those things where the guys spend a week on a boat and talk about the trading, and then they drink too much or whatever they do. And I've never done one of that because they're never getting me on a boat or a ship. Either one. Will not do it, don't care, don't want to. So that's one of the things that we're paying attention to today is that Apple, because that is completing that, and we'll see whether that's it. There is some divergences in the market, of course. We're having one in the NASDAQ. We're also having one in the Russell, but that doesn't mean anything, folks. These divergences happen all the time, and sometimes they happen at top, sometimes they don't. So just follow your game plan of what you're supposed to be looking at, and that'll get you to the promised land. That's the main thing. Okay, that's I wanted to give you that. But the euro is getting close to a main resistance at 119. We'll be right back, folks.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we'll have John Person here on the line in just a minute. I posted some of his charts. John has been trading for 25, 30 years, I guess, and trades down in Florida with he and his lovely bride, Mary. He suffered a really bad accident 6-7 years ago. Somebody ran over him in a car. He's been drinking, I guess, and not John, but the other guy. And anyway, he recovered nicely from it. So he's going to be calling us in right now at 877 927-927-6648. John will be calling in. Folks, it's my fault. I thought John had been on here before because I speak to him occasionally, and I said, let's have you on again, and I thought that he had been on before. I was 100% sure of it, but 100% for me is like 10% for everybody else. While we're waiting on this, you can see here that the gold market continues to go higher. We went all the way up to the 1746 level today. We're waiting to buy on a pullback. We were fortunate enough to make a nice run on this on the upside. We got out of it too soon, got out of the silver too soon. But what we got is on the line right now. Mr. Person is in the house. John, how are you?
Happy April to you, sir.
Yes, sir. It's not April Fool's, but it's close enough for government work. John,
no,
tell
it
the
is
folks,
not. It's well past April Fool's. That means this rally's for real.
Oh, it is. Is it ever for real? Shut the front door and raise the rent. I couldn't believe what happened Friday when I was, Good Friday. I thought everything was closed, and I heard my beepers go off Friday morning when that report came off. And I said, oh, my gosh, they brought reports out on Good Friday, which really surprised me, being a government holiday. John, tell the folks your background a little bit. We met back in the 30-some years ago in Chicago at the floor. But tell the folks how you got started and what you're doing now.
I started in, sum it up, 16 as a runner at the floor of the exchange for a summer job, had no interest in commodities whatsoever. Went to school, wanted to be a lawyer, was studying economics down at Loyola Business School, was taking a train home, and guy I sat next to, this old-looking, cowboy-looking guy in a white leisure suit, kept asking me what I was studying, and I was like, he looked like Santa Claus in a cowboy outfit. It turned out to be George Lane, who, as you know,
my God.
maybe your listeners don't, was the creator of Stochastics Indicator. Anyway, long and the short of it is I went on to work for him for a couple of years and went on to learn about my trading on my own, about bonds, because George was more interested in grains and agricultural products, and I was more of the new age of interest rates and financials. And then back in 1984, they introduced this obscure derivative product called options on the very first commodity, which was the Treasury bond, the 30-year Treasury bond at the Chicago Board of Trade. So I learned about technical analysis. I learned about options back in those days, and Larry, I hate to admit this, but I know you remember those days. But interest rates were going down, bond prices were going up, and I was bullish. And boy, it was a fantasy come true for a guy that leveraged his leverage on top of leverage, being directionally long in the options. So I did quite well back in those days. I developed my own little trading niche and used particular indicators and combined a bunch of stuff, and that's where we came up with developing my own trading indicators. And then in the late 90s, this company called TradeStation allowed people to develop their own ideas into code, and I did a lot of algo and creating of my own systems and strategies. And lastly, this guy by the name of Tom Sosnoff came around and with this company called Thinkorswim and said, hey, I like your stuff. Let's put some of that on our website, and so therefore on our platform. And that's where you can find 3 of my top indicators on Thinkorswim's platform. That's it.
Wow. Say, listen, I've got one of your charts up. I think it's PYPL. Isn't that PayPal?
PayPal. I put up a PayPal. Okay. Yes.
Yeah,
PayPal has exactly what probably 2 of the 3 indicate. No, it's got all 3, actually. I just eliminated a couple things. PayPal. I'm looking for a nice pop. We have one indicator I created was I just didn't find relative strength, which is comparing the trend or percent change of one instrument versus the S&P 500. It's not a technical oscillator like Wells Wilder created. This is relative strength tool. And that's the indicator at the bottom, and it shows improving RS. And what that means is that the momentum of the relative strength is starting to improve versus the S&P 500. That's very positive. That's very nice. The next thing is that the market currently is in a little blue arrow, popped last week against the lows, and the market's trading above blue horizontal lines, the weekly person's pivot. So the market is showing you technically it's coming out of a basing action. It's showing that there's improved relative strength. That's something a lot of institutional traders look at. And in the middle, it's not my tool, it's Joe Granville, and I know you knew Joe, It's called on balance volume, and it shows that the market is starting to slowly see some volume accumulation come into the stock. And I'm looking for the next level of big resistance. There's a gap up there from March 8th, I believe it is, and I put that big green horizontal line. And that's about a $20 move from here, minimum first objective, and I'm looking for that to happen between now and well before earnings on PayPal, which I believe is May 5th. There it is in a nutshell. I think traders can look at buying hopefully in some next day or two. If there is any type of a pullback around 48 or so, and in this market, Larry, it's kind of like a dump before a pump. People get a little bearish, and if the market can get a little tricky, buy that trickiness and buy that dip in the market, and I think you'll get a rip up to a minimum objective, that 267, 270 before May 5th. That's the trade in a nutshell. Risk, you don't want to be in this trade if it closes a daily basis below 241-ish. That's that moving average line. So if I'm right, we should see dips, higher lows, higher highs, and improved volume and improved relative strength between now and the rest of the month.
Okay, we've got a question for one of our listeners, John, and that is what percentage of your trading is done by options versus just flat out, stock or futures?
These days, to be honest with you, I do more equity than options. But in PayPal's case, it depends on the time horizon. So I would say 30% of my trades are more options these days than overall equity. So I do more equities than I do options.
Wow, that's really something. I didn't realize you were doing so many equities because, when I knew you, all we did was, futures. They're down on the floor for sure.
It's kind of ironic because my start was in futures and I do more equities, and my start was in options. And right now, this year, I know there's a lot of people that look at unusual volume activity, and I try to tell people, listen, that might be okay, but a lot of people only like to list their winners, and no one ever lists all their trades. And the one thing about unusual volume activity, as you probably would tell your listeners, for every buyer there's a seller, and you really don't know what the other side of that trade is doing. Is it a hedge? Is it a collar? Is it a calendar spread? So while I do think there's validity to unusual volume activity, it could also be someone taking in a little bit of premium on a theta decay of an underlying instrument of stocks. So yes. I think that we've gotten a lot more opportunities in equities, believe it or not, and lower capitalized traders love the option. They love that leverage that options can give, but yet I find that the market's a little bit easier to let your money work for you rather than you working hard for your money. And unless I'm extremely bullish, I really don't rarely buy an outright option. And I think that I'm more, maybe if I'm extremely bullish, I'll do something, Larry, like a ratio back spread, or I'll do a vertical.
John, we got to pay a few bills. Will you stay with us for the next segment?
You got it. Thank you.
Okay, we'll be right back with John Person, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks. We're speaking with John Person out of Florida. And John, did you ever, in your wildest dreams, going back 40 years ago when we first met, that we would see volume like this and all the different things that we can trade now? I mean, every day when I wake up, I thank God for giving us the opportunity that he's given us because, oh my goodness, I can remember. It seems like yesterday you walk into a pit and you were trading eyeball to eyeball. You never know who you're trading against now. I mean, it's so electronic that it just truly amazes me.
Well, that and self-clearing and also dark pools. It's been an interesting world behind in the equity markets, and it almost seems that the commodity industry is just dead and buried. I mean, almost. I mean, it just that's the real kicker. If you look at the open interest on the S&P futures, I think they're sub 3.2 million shares when it used to be 4.5, 5 million. So between the micro futures, the mini futures, and the big futures are a dead thing. But it's interesting where all the asset and the money in this world, and the amount of people in this world. But 40 years ago, when you and I started in the business, you didn't even have the CAC 40. I mean, the Paris Exchange wasn't around back in those days. So
that's right.
You think about every country has either a stock exchange or a country has a commodity exchange placed in their presence. So. That's the neat thing. And now with Bitcoin and all the subsidiaries of crypto currency, you never hear the big Forex thing being Forex was a big thing back at the turn of the millennium at 2000, right? Everyone was doing Forex, was the new get-rich-quick thing. So pot sector stocks, I mean, if we can get banking laws and federal changes, I mean, look what we can now trade pot. I mean, it's Larry, it's crazy.
Yeah, well.
They used to say buy low, stay high. That was the mantra in the 80s. But now this is literally buy Twinkies, buy Tilray, and then maybe we get long some dental stocks, because people are going to have tooth decay. I don't know. I'm joking around.
Yeah. Hey, John, we have a caller from Singapore. If you remember back in February when the guy went minus $27 in crude oil.
True, that was last year.
Well,
37 to be exact. Right.
William is on the line, and it wasn't him. I was going to tease him a little bit, but he's a good friend, and he has a question for you about options. William, you want to go ahead?
Okay, thank you very much, Mr. Pesavento. And I don't want to take up too much of the time. So let me make two quick questions. Mr. John Person, I know you are an expert in options, and you mentioned just now, at this point in time, you actually trade probably about 30% on options. Now, my question is that, will you consider trading either Straddle or Strangler in place of all others, calendar spread or whatever? That's my question one. Number two is that, do you trade options on gold and silver futures?
Okay, so first off, let me take the last question. Do I trade gold and silver future options? The answer is absolutely no.
Yes.
Bottom line, I think that, to be honest with you, we stole too much business and liquidity away from the commodity industry via ETFs, so GLD, SLV, and I do trade other ETFs like in right now, as a disclosure, I'm currently long GDXJ, which is the junior miner ETF, and I think you can come up with better hedges. And that's one thing I definitely say, Larry, do I trade options outright? I also use options, and then the answer was 30% of my trades are probably option strategies, whether it's naked net long call, directional trades like a vertical, calendars I do. I mean, it depends on the circumstance. It depends on the outlook that I have and the time frame that I'm looking for a market to move. I also use options the way they were intended as hedges. So if I'm expecting a stock and I really like the stock and I like the dividend, I will put on a collar strategy selling upside call premium to help finance a downside put and give me a ride through maybe a bump in the road, so to speak. And so for me, leveraged ETFs also have very good liquidity, access to options, and quite frankly trade, in my humble opinion and experience, a little bit better than options have in the commodity arena. So hedging using options is also a good play, and that's against equities.
Well, William, you've heard a real professional describe what he does. Yes. I hope you understand it, my friend.
Yes. The only question is that, for stocks like Tesla, sometimes it's difficult to look at directions. So I was thinking whether, would it be better to use the straddle or strangle? Of course, we have to pay a lot of premium for that. Yeah.
Right. So in the case of volatility, and again, for options, Larry, I'm sure your guests have heard this a bazillion times. Implied volatility compared to historic and 52-week is everything. And you look at an option, and before you even look at a market, you have to look at the implied volatility. Last year, obviously, volatility was historic. So, looking at where options are, and I think in this case, I mean, sometimes iron condors are a little bit better of a strategy, and the volatility that we see in the amount of velocity, the rate of change that markets move, and we've seen countless. Look at the last hedge fund that just blew up last week in the telecom media circus. Look at some of those moves that we had. I mean, those are hard to fight the one day that you get into a strangle, and I just value my equity too much to get involved in markets this day that can ruin me in one day because I have the wrong strategy on. So I'm not one to do naked options in this environment, and I use them more as a hedge unless I'm extremely bullish. And as you mentioned, Tesla, I think I just, because it is a very popular stock, I sent a chart out there to Larry on Tesla with that indicator that I created, the relative strength. The relative strength's actually improving on Tesla. Volume's been very steady down at these lows. I think Tesla longer term is going to be in maybe a higher degree trading range. I don't believe in what I call Joan of Arc, Kathy Woods, who owns Arc and runs Arc Investments, who believes that this stock can get to 3,000. I don't know about that in my lifetime because I'm getting older, but I think in the very next 30 to 90 days, 30, 60 days, we're in a trading range, a magnitude of a trading range, and we're probably going to see the market test that $800 number. That's not hard to say. So, I mean, if you wanted to do something like an upside call spread, like say a 725, 750 in that regards in the May option expiration, that would be a play that I would do based on the current technical picture that I sent into Larry.
Okay, thank you. And thank you so much. By the way, I have met up with you in 2011 in Money Show in I can't remember in this Vegas or in this what you call the New York. Yeah, other than attending Mr. Pesavento session. You are the two person that I attended the session there. Yeah.
Well, Larry is probably one of my top 5 favorite individuals in this industry. It's quality individual. I mean, he's just one of the greatest. So
okay, your checks in the mail.
I don't care what I'm doing. If Larry calls up, I'll come, and certainly it's an honor to be on his show, and I mean that.
Right.
Okay.
Yeah.
Hey, John,
thank you very much.
Thank you for calling in, William. Thank you for calling in.
Yeah.
John, do you still do what do you call those cruises, the trading cruises where you trade on the cruise and stuff? Do you still do those? Or you don't do it during the COVID, but are you going to do them again someday?
The funny thing is, it's interesting that you have a caller from Singapore, because last year we were supposed to be on a cruise in February. I think it was going to be February of this year. It all got canceled, but it was a cruise which we had scheduled to fly over to Singapore. I was going to do a conference in Singapore with TD Ameritrade.
Hold
in
on.
their office because of that merger with Schwab.
Hey, listen, Stan, we got a little break coming up. I want to tell them how they can reach you, okay? Stay with us. Stay with us. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks, talking with John Person. John, do you still offer services on your why don't you tell the folks how they can reach you and what you have available?
All right. Well, our website is personsplanet.com. We work, obviously, with a lot of individuals to do, I don't know what you would call it, customer service appreciation, free webinars once a month. We call them PUG meetings, persons user groups, ranging from TradeStation users to Thinkorswim users and other platforms, even an HGSI for stock equity traders. And we conduct those free webinars, lots of free videos that we've done from the past, I don't know how many decades. I run a little managed fund, so I'm busy with that. We also have an advisory service for more institutional and retail advanced traders for equities. Holding period is 3 to 5 weeks generally, or a little bit longer. and that's where you'll see full disclosure of exactly what we get in, where our stops are, profit targets, trailing stops, that kind of stuff. So we have an advisory service in that regards. The amount of work that we do is contained within technical work, running a lot of technical scans that we've developed through the decades, and that's basically it. So very rarely have I gone out, as you can tell from just that perspective, on the road speaking, and during COVID we don't do that. And I really didn't find the energy level to do a lot of Zoom meetings after the markets closed, especially in the last, say, 14 months of this volatility. So it's been an exciting, fun time. But I guess maybe I'm getting a little too old for teaching stuff all over the world. So you can go right to the website and dig yourself a wealth of information there.
Well, I have a cat older than you, and you still are the #1 handsomest guy on the Chicago Mercantile Exchange. I still have that trophy there in the case there at 141 West Jackson.
Well,
so
my wife hasn't gotten rid of me yet, so I got something going on for me.
Hey, listen, thanks for joining us, buddy, and may God bless. We'll have you on soon.
Oh, thanks, Larry. God bless you.
See you folks
too,
tomorrow
man.
with
Love you.
Arch Crawford's our guest.